Hey everybody, it's Nakia from Pink Sands Group out here going live with you ladies again. Hey moms! So we're going to give a few minutes for everybody to come on. I know you guys are excited about our topic today. What is our topic today? It's about home ownership in this market. How can you possibly buy a home in this market? People are talking about the struggles to buy, but what we're not hearing is how can you actually buy a home in this market? What can you do to be a homeowner? What can you do to get your rate lower? Hey Tamika, hey Martine, hey Naomi. It's so many things that you can do to prepare yourself to purchase in this market and to actually buy in this market. So I'm super excited. I've got my favorite lender from Homeownership is popping, coming on today. Oh my goodness. So this is who we've got featured today. Oh my goodness. I cannot wait. So I'm going to invite her in shortly because we're going to talk about you guys, your journey to home ownership, what you can do to prepare to purchase in the current state of the market. Is some steals out there? Is some deals out there? Take advantage. So let me invite Shiba on, and I'm excited to introduce her to you very shortly.
A few moments later.
So,
like magic, I appear.
Ta-da! There we go. So, when technology doesn't work, this is what you do. But what's so exciting, this is the cool part. We are actually in the Home Ownership is Poppin's office. It's so cute. I love it here. I love it. I just want to live here. I want to work here. Yes. But we're excited about home ownership. And Tamika, I do see your question. You asked, what should your report look like and how will late payments on a private student loan hurt you? Is it a deal breaker? And I know for you, Shiba, it's case by case, so these things can vary. How would you even answer that question? Does she just need to apply and see?
Yes and no. Hey, McDonough moms, how are you? Hey, Martine. So, Tamika, nice to meet you. It's kind of weird because any late payments that you've had has already affected your actual credit score. So, the first thing we're going to look at is those actual numbers. We pulled 3 bureaus, Equifax, TransUnion, and Experian, and we used the middle score of the 3, not the one in the middle, but the average middle score. So, your late payments have already been affected in there. So it's not a deal breaker if you've had some lates because we're very understanding of what has happened in, prior. We're more interested in how you're going to look towards the future. So as long as you've made some positive payments going forward, then those late payments, you've already been affected by the lowering of your credit score. So in hindsight, no, it's not a deal breaker.
Is not a deal breaker for me.
If they're delinquent right now, you definitely want to correct them and make them positive because although we're forgiving, we don't feel comfortable lending you money if you aren't paying your bills currently. So it's just like common sense. You wouldn't lend money to a friend or a cousin if they already owe you money because now they double owe you money. So just make sure that you're positive. All of your accounts show that you're making your payments on time or before time, and we do forgive late payments.
All right, well, that's good news. So it's not a deal breaker. Yay! So good to know. And I know you've been working on your score very hard. So congratulations to you getting it up. And I think that was some great advice. So what we want to talk about, a lot of people are, looking at the real estate market and wondering, oh, wait, someone payment plan. Oh, real quick. I'm sorry, she had one more quick question. Let's finish on that. She said, so she's on a payment plan with them.
So a payment plan, you mean like your regular payments, or are you on a payment plan to fix the delinquency? So there's a difference. Are your loans in default? So these kind of maybe some intimate conversations that we can have about your actual student loans because there's different payment plans that we would want to know about or know which type of payment plan you're on.
So what we'll do, we'll get you connected with Shiba, and like I say, so you can have a private conversation about that, and then get you some guidance on getting yourself up to date. Because I know, like she said, you don't want to be delinquent. You want to have things kind of up to date and move forward from there. And it's probably the best course of action. Hey, Kenya, thank you for joining. We were just leaving the floor open. If anyone had any questions, pop them in the comments below. But like I was saying before, we want to talk about this current real estate market. So the real estate market, it goes through cycles. So the cycle that we're in now is changing a bit. Right, it does. It's changing a bit. So how can you navigate as a buyer and actually buy a home? Because we all know rents have gotten absolutely ridiculous. A lot of people are talking about, oh my gosh, these rates. Homeownership, sometimes people think it can't happen for them. And it actually can. We were just talking the other day about a client. You said that she didn't think she could purchase a home. I think I saw it on your Facebook post, and she was just elated that she was able to go through that journey and do it.
Mm-hmm. Yeah, definitely. You just have to get out there. You have to understand you got to live somewhere. You're either going to be renting, you're going to own a home, or you're going to be living with somebody that you don't like. So
right.
At some point, housing is one of the really the number one essential that you need to have, other than transportation and a job.
Right.
But housing, you have to have some type of housing. Gone are the days where mortgage payments were cheaper than rent. Gone are the days to where they were literally just giving you a house, and gone are the days of the low 2 and 3% interest rates. So once you get that out of your brain and you realize it's 2023 and even eggs cost $6, housing is going to cost you. That is a percentage of your income that you just have to pay, unfortunately. So you just have to kind of budget yourself. I always tell my buyers the first thing they need to do is 1, check their credit, 2, check their finances, and 3, create a budget.
A budget?
Budgeting is the biggest thing, because your eyes could say, oh, I want this big, marvelous 5-bedroom house on 17 acres of land with a basement and a pool, and your budget can say, nope, let's start with a starter home.
Right.
So before you even start looking at housing, you need to look at all of your bills, your debts. You need to set aside some money for utilities, because you got the house, but you also got the stuff that it takes to live in the house.
Right.
So you need to set a couple $100 for your utilities a month, and then you need to compare and say, I make $5,000 a month. My personal bills is $1,000. That leaves me $4,000 a month. Utilities probably gonna run me $500. That leaves me $3,500 a month, and I can really afford $2,000 for a mortgage payment.
So I put you those numbers. This is a numbers person. I'm still counting in my head. What?
So at that point, $2,000, and then when you talk to the loan officer, you just let them know, hey, my budget is $2,000 for total mortgage payment, principal, interest, taxes, and insurance. I don't want to go over $2,000. And once you get that in your head, they can let you know, okay, $2,000. You want to look at houses between $200 and $215. At that point, you're not getting your hopes up high. You're not saying, oh, I can't find no house. You know what your budget is. You know what you can afford.
Right.
You purchase that house. 2 years later, equity bills. You sell it for $300.
Right.
Realistically, you can do that.
And we've got clients that are doing that right now.
You sell it for, I say, $260 to $300, and then you buy the next level house, or you buy the dream home.
And that's the key thing that you said about having the budget and remembering that this is your starter home. It's called a starter home for a reason. It's not the end all be all home, but like Shiba was saying, you really got to pay to stay. You got to pay wherever you're going to be, or like I said, you're living with somebody that you really don't want to live with. So with that being said, we have clients that have done that, or in the process of doing that, where they have bought their starter home, and guess what they're doing now? They're either going to upgrade into something else, or they're moving out of state. But like you said, home build equity. Equity is the value of your home going up. You owe less than what you actually owe on that property. It's amazing to do that and to transition yourself into your next stage in life. So just remember, you're just starting somewhere. And because we had a client this year, I won't call her name, but remember, she was in that mid-2 range. And it took us some time to find her something. But we had that conversation about, it started off with, I want A, B, C, and D. I wanted a single family home. But we ended up placing her in a gorgeous townhome. Beautiful, nice, quiet community. And she realized this is her starter home. She's starting there. And it's so funny because she set a goal for herself to say, I'm just going to start here. but she told me where she wants to be in the next couple of years. So guess what? She's saving her money and she's working her way to get to that place, and her home is building equity.
And most people don't stay in their home 5 to 7 years.
They don't.
That's kind of what it, and if we go back a year or two during COVID, people bought houses in 2020 and sold them in 2021
Correct.
because the market was so high.
Yep.
And when they bought those houses, they were thinking, oh, this is my dream home. The rates are so low, but then the equity got the pop in, and they got up out of there.
Yep.
And so some transitioned to more house
Right.
now. Some went to apartments, and then some went living with other family members,
Correct.
and some moved out of state. A lot of these jobs are now saying, no more working from home.
Right.
So
Yeah,
they
that's
had to go
changed.
back where they came from.
Right.
And they sold the houses. So there's inventory out there, a ton of price reductions.
Price reductions. We were just talking about it earlier today. You guys, don't miss out. I say it so many times, but the price reductions, as a realtor, we get notified every time a price is reduced on a home. I get email after email after email saying price reduction, improved price improvement, all kind of fancy little words. Basically, they done took the price down from what it was originally listed at. What does that mean for you? That means that the price is going down. That's going to save you on your mortgage payment. That's going to save you on what you're paying in closing costs. And in essence, that means there are deals out there for you. Now, we're not saying deals where we're back in like 2007 to 2008 where you can get a home for $20,000. But deals compared to what the housing market was last year. Everybody remembers that crazy frenzy where you couldn't even get in the door. So imagine now that you go to look to purchase a home. You could write an offer and ask for closing costs from the seller. They are back paying closing costs people.
Yep.
That's going to help you a lot. But also these price reductions. And that may even give you wiggle room to offer a little bit less on that home. So you just never know. Sky's the limit. And people that are taking advantage of those are really winning right now.
Piping hot tea. That price reduction you get with your agent, and she tell that seller, hey, or that listing agent, hey, seller, so you just reduced it $20,000. How about we meet you at 10 and you give us 10 closing costs? That way he's still getting his same bottom line, but it's also helping you.
Correct.
I mean, there's just a ton of different ways that you can twerk that money. You can tell them, hey, are you willing to offer concessions for a buy down so I can buy this house for you? They want to go just as bad as you want to come.
Exactly.
So you have to just make sure you
Be
get
real
with a
creative.
knowledgeable real estate broker
And a knowledgeable lender.
Yes, that can kind of negotiate that deal for you, because everyone wants to either sell or buy. It's which end you're going to come in on.
Right.
So if you find your dream home, just make sure that you give them the most realistic offer. Don't go under and then ask for more.
Thank you for saying that. Thank you for saying that. So we educate all of our buyers before they make their offer. But I have homes on the market for sale as well, and these buyers come in and their agents, they'll come in and offer $30,000 below, then they want $10,000 in closing costs. That's probably not gonna fly.
Yeah.
So you want to have a good offer, but what a good agent will do for you, they're gonna check what are the recent sales in there, because like you said, with those price reductions, one thing to keep in mind is this. Either the house was priced way too high before, or they just don't have enough movement. But the thing is, the house has to appraise. So you want a great agent that's going to check and see, do I feel this home can appraise for this price? So you can ask for those concessions. So again, get a knowledgeable person to help you, because you want to go down the right path. You don't want to lose out on your home or any funds that you have contributed to purchase that property.
Nope. Because once they get a bad taste in their mouth, oh, they're trying to undercut me, or they're trying to get over on me. Although you guys have to present every offer to the seller, having that conversation with your seller, they have a bottom line too. Either they're rebuying another home,
Correct.
they're trying to pay off their mortgage, they're trying to get off and under, maybe they overpaid. So, they may have leeway in what they're trying to achieve, but you need to just make sure you're not going in and making them feel like their house isn't worth it. Because sometimes these be childhood homes,
Right.
These be their dream homes, and people are attached to their house.
They are. It's an emotional process for you as the buyer and for the seller as well. And I tell my clients, you don't want to offend the seller.
Yep.
Because just because that home may have been sitting for 20 days, and you come and say, I'm going to lowball this home and I'm going to get all these closing costs, that doesn't mean that somebody else didn't come in that morning before and put in a better offer because they offered based off they wanted that home. So be very careful with that. I know some people get the notion that, well, it's been on the market for a while and I'm gonna come in crazy. And we've had instances where we would call the agent and say, do you have any offers? They're like, yeah, I've got 3. Some people may think, oh, they're just saying that. No, that actually does happen. You can get a couple of offers after it's been on the market for a few weeks. So be very mindful and just consult with your realtor to make sure that you're putting the right offer forward. But again, you can be very creative with it. It's so many options out there for you guys.
So getting back to credit score, we do credit scores down to about 580 with 3.5% down. And when I say 580, you can't have a 580, which means you probably got some recent delinquencies, and that's okay. But you can't have a 580 and demand or want down payment assistance and seller paid closing costs. The lender or the underwriter is going to look at it as if, what skin in the game are you putting in?
Right.
Why should I trust that you're going to pay me for the next 30 years when you have these recent delinquencies, you're getting assistance for the down payment, and you want the seller to pay your closing costs? What are you bringing to the table?
Correct.
Gone are the days where government agencies or anybody is just giving you a free house.
Right.
9 times out of 10, this is the biggest purchase of your lifetime. So if you're not willing to put your own skin in the game to show them, hey, I made some past mistakes, but I've gotten myself together and I'm ready to take on this huge commitment, they're not willing to approve you for it. So if you have a 580, make sure you have reserves. When I say reserves, that's money to show that you can pay your mortgage payment for 3 to 6 months. The longer the better. That can be 401k funds, that can be savings funds, and that can be money that you inherited from a lawsuit, a car wreck, whatever it may be. Gift funds aren't considered reserves because someone had to give you those.
Right, you didn't save it.
You didn't save it yourself. And even if you go to programs like NACA, Georgia Dream, which are the National Down Payment Assistance Programs, they make you wait 6 months to save that money month by month.
They sure do.
They don't allow you to do lump sums. So you have to show them every month. I say $1,600 outside of all my bills. If you say that's impossible, well, it's impossible for you to pay a mortgage.
Right. Correct.
So that's what it wants. That is exactly what it means. So they want to see that money. So if you got between the 620 to 640, you may not need those reserves because that means you've been paying your bills on time.
Right.
Your credit cards may be a little bit high, but you still managing them and you don't have late payments or delinquencies on your credit file.
That's key there because I get a lot of buyers, they'll call me and they're like at a 670 or 680, like I gotta get to a 700. Something about that number, they think they can't buy a home or get a halfway decent rate without that. What do you say to buyers like that? Because in essence, they are pretty much ready.
So down payment assistance, it doesn't matter if you have an 800 or if you have that 620. You're going to get the same rate, unfortunately, because it is a rate for that program.
Gotcha.
My NMLS number is 770627. So right now, the rate for down payment assistance, 3.5% grant. It's for all first-time home buyers. It's for second-time home buyers if you're a nurse, doctor, a teacher, EMT, you work in a couple other public service industries that I can't think off the top of my head. But that's fully forgivable. They just give you the 3.5%. You don't have to pay it back. You make your first payment and it goes away. That's huge, but the interest rate is 7.75 right now.
Wow.
Where you go back, but a regular FHA interest rate right now at a 700 credit score is 7.25. So rates are just high, right? Unfortunately, we are at a point where we leveled out the field and rates are back to normal.
Right.
This is what rates were prior to COVID. Back in 2019, 2018, this is what the rates were.
We're getting back to normal.
We're
I think
back
it's a
to
shock
normal.
to people, but we're back to the normal and people are still buying homes.
Yeah,
so.
every day people buying homes. We're still processing. We're still here, thank God. But people are still buying homes because they can get the good deal on the actual home
Itself, exactly.
So you go out, you find the nice home, you buy the home, the rate's temporary because as soon as the rates dip, you can refinance.
And that's the thing there about rates being temporary. Some people talk about, well, if the rates are temporary, is that a adjustable rate? No, it's the option of refinancing your home. And you've probably seen this a gazillion times. What does refinancing really mean? You go in initially, you have a higher rate, you've got your higher payment. The beauty of that is when rates go down, you can refinance and get a lower payment.
Correct. Yeah, you refinance, you use the equity that you've gained, you pay off the existing loan that you have, and you create a new loan. So sometimes you having to borrow more depending on how your previous loan was set up. But there are some closing costs in there, but mainly the closing costs are setting up the new escrow account for your new loan. So it's not like when you purchased the home. But you pour the equity, some of the equity out, cover the closing costs, you get a lower rate, you get a lower payment. And I have flexible terms. If you've been in your house 10 years, you only got 20 years to pay your house off, guess what? We can do a 20-year refi.
Oh, nice.
We don't have to start back over to 30.
Because a lot of people are so scared they got to start back over. So, I mean, you guys, that's news for you right there. You don't have to start back over in certain circumstances.
Yep. And I mean, I always say just take the longest way, because if 20 to 30, both of them are a long time.
Correct. Exactly.
I don't see myself ever paying off my house. I'm not even making a payment to think, oh, I'm going to pay my house off in 30 years. No, I'm living for today. Correct. So I'm making my mortgage payment today. If I have to refinance, I'm refinancing for 30 more years, because that's a bill that I will always have.
Correct.
I always have to have somewhere to live.
Exactly.
So I'm not worried about paying my mortgage off. I maybe pay my car off because that's 5 years, but not my mortgage.
Right. And the thing with the mortgage, like I said, you're always going to want to have somewhere to live. And then, like you said, if you're stretching it out, the thing with the home is that as time goes, like I said, we talked about the real estate cycles, they go up and down. So when the housing market, is hot again or whatever, then you still have your equity in the home. But the key of it is this: you have comfortable monthly payments, because I know a lot of buyers come in, they're concerned about the payment. That's one way there to keep your payments comfortable, because you have the option to refinance.
Yep. And even if you needed to, I mean, right now money is tight for everybody. Everyone in America is dealing with something, because the groceries went up, cost of living went up, but the job's not increasing your pay as fast as everything else is increasing.
Correct.
Gas is high, the cars are high, everything is high. So money is tight. If you needed to borrow money out of your home, you have a savings account sitting there. You can tap into that account using a HELOC, a line of credit, or an official cash out refinance, and you don't have to go and ask Joe if you can borrow the money. You're using your own funds.
That's the beauty of home ownership, and I love that you said that, because you are sitting literally in your own savings account in your house, just like that. So
now you're gonna have to keep your finances up, because we do want to know, can you take on this extra payment? It's monopoly money. It doesn't turn into actual money until you create an action on it, meaning HELOC, line of credit, or refinance. But the money is there. I'm able to tap in maybe about $150,000, $160,000 out of my house. But because it's not real cash money, I will have to pay that back.
Correct.
It's a loan, just like everything else, but it's money that I've put in and that I can take out.
Exactly. So like you say, you don't have to go ask anybody else for it. It's right there for you in your house. Go apply. There you go.
Yep. Another thing that we do look at, so credit is the first. Credit is what knocks on the door. That's what get me to open the door, is your credit. But we're also looking at your debt to income ratio. So that's your DTI.
Right.
You can have that 850 credit score, but if your DTI is 60%, you don't qualify. So we have to figure it out. How can we lower it, or lower the sales price, or what can we do? So that comes into play, these student loans. Student loans. You need to pay attention to your student loans, because those payments from the Biden administration, they're ending.
Yep. Like in a few weeks.
So what are you going to do? That payment's going to go from $0 to $950,000 a month on some people's student loan payments. So right this moment, before it ends, before you're sitting on hold for 5 hours trying to speak to somebody, because everybody's ending on the same time. It's not A through G going to end on Monday, and no.
It's going to be crazy.
Everybody's ending. So why not make an action right now?
Do it now.
Call them, get on an income-based repayment plan, an income-driven repayment plan. They'll ask you a couple of questions. They'll have you send in a couple of docs, and get the lowest amortized payment possible.
But
do it now. Amortized means, yes, they put you on a time schedule, either 10 years, 20 years, 25 years, so it stretches it out, so it makes your payment the lowest. We accept that as a lender.
You hear that?
In writing, an approved income-based or income-driven repayment plan. But do it now. I can't stretch it. I cannot stress it more. Do it today, because tomorrow 500,000 people are going to be trying to get in touch with them, and they don't have a huge call center, so that means you're going to be on hold, you're going to get frustrated, you're going to hang up, and then that payment's going to hit you, and now you got it late. And normally these student loans aren't one account, they're 15.
Correct. So you have, they break it down, so you have all these late. So be careful, guys. I mean, that's the best advice given today. I know we're talking about home ownership, but that's the best advice today. That's going to help you credit-wise. We're not credit specialists. However, he's this advice, because like she said, it stops at the same time, and it's going to be bananas. Yeah,
it's going to be bananas. So, you know, I definitely say, if you don't listen to anything else, take that advice. Call, get your student loans under control. If home ownership is on your schedule for the next 6 to 12 months, even 2 years, I'll say. Because there again, we do look at the last 24 months of everything. So you do not want a late, because one late can drop your credit score 50 to 100 points.
That's a lot.
It's a lot, and it's hard to get them back.
Yeah.
And those late payments they stay on there for 7 years.
Right.
So that's kind of tough. So student loans is a big one. Make sure you get that under control, and then your credit accounts, just try to pay them down as much as possible. The industry is 30%, but if you can get it down to 10%. Doesn't mean you can't use your card. It just means when it's time to pay it back, pay it down as much as possible. If you got a $2,500 limit, you use $1,700 of that. Try to pay off $1,500 of that. You're using it for a reason. You shouldn't be using your credit card if you can't pay it in cash.
That's true.
That's how you get in trouble. Exactly. I love credit cards. I have a ton of them, but I utilize them the right way for points and travel and different things. But when I charge it, the next month I'm able to pay 90% of that off.
Right, and that's a good rule to follow. Keep your credit intact, guys. Definitely. So, hey Venus, hey Sherry, we've got a lot of people on here. I want to stop to see if you guys had any quick questions. I know that was a lot of information, and I hope that was valuable to you guys. Let's see here. Just scrolling through for questions. They don't always come through in a timely manner, so if you got any, drop them in the comments below. But yeah, so like Shiba was saying, you know, she gave a lot of nuggets there on different things you can do to really just prepare. So this is pretty much homeownership 101, how to get your ducks in a row, get yourself in order. Like we said, you know, wherever you are going to live, you're going to have to pay to be there. Unless, I love that line, you said you stay with somebody that you don't want to stay with. That is so true. So definitely, you know, the path ownership. I want to drop into the chat Shiba's information. So if you guys, you know, want to reach out, have more questions, want to get qualified, or, you know, get on the path to home ownership, your number is 678-304 9590. So like I said, Shiba, I'm going to put lender in the chat, because I know
I've pretty much seen it all.
Yep.
If I haven't, then it hasn't been created, but been doing this with my daughter's 20, so well over 20 years. And you know, everyone's not perfect, but you don't have to be perfect to purchase a home.
You don't. We've done enough deals together. All our clients aren't perfect, and like you said earlier, you know, every situation is different. And a lot of people sit there and think, you know, I can't buy a home, but you don't know unless you take that step, talk with the lender, let them do the application. And some people have been surprised. Remember Miss Paula, we got her in that house a couple of years ago. She's still there.
And I mean, it's no one size fits all. What worked for you when you purchased your home didn't work for me, and vice versa.
Right.
So self-employed. We both sit here self-employed, not a traditional W-2 income earner, and we still was able to purchase our house in the last 4 years at different times, at different measures. But it can be done. You just have to really know, and call me, apply online. We can do a mortgage personalized plan. If it's not today, then it can be tomorrow. It's never a denial. It's just a delay. So at some point you have to speak with an expert, not a guru, because they don't do this every day.
Right.
But you have to speak with an expert that does it every day, and that can give you the tips and the tools of how to make you a homeowner. Not a broad range of people, but specifically you.
Exactly. And like you said, someone that does it every day. Like you said, you've been in the business for a while. I've done a number of deals with Shiba. She refinanced my home. I'm a homeowner as well. And I can't speak highly enough about this young lady here. Amazing lender. She is so knowledgeable and so creative. The things that you think of, it just blows my mind. So I'm telling you guys, excellent lender here. She works very hard. And she works hard for her client, not just for herself, for your buyers. And it shows. It shows with the way we get them to the closing table. We have yet to be late for a closing.
No.
Most times we're early and we're ready ahead of time. So just know that you guys are in good hands with Shiba from Homeownership is popping. So Homeownership is popping. It's definitely a good time to purchase once you are ready. It's always a good time to buy. It's based on when you're ready, but you don't know if you're ready until you what? Do your application.
Yep. And I'm in a group, so you can add me. A little bit of the inbox. Sometimes I can't get to it, or I forget, or I say I'm gonna come back. So email, phone, text is way better than the inbox, because the messages kind of get shuffled and get lost. But we do have an office not too far from McDonough and Jonesboro, so we are local in the area. Any questions, concerns, we're always here. So we're not out of town. We're not in California, where you get a different person every time you call. It's 3 people here. All of us work together, and you'll speak with me, my assistant, or my processor, and we can definitely answer your questions and get you on a path to home ownership.
Thank you, Shiba. I appreciate you coming on today.
My pleasure.
I'm Nikki with Pink Sands Group. When you guys are ready to start that journey to home ownership or thinking about selling your home, reach out to me. I'll drop my information in the chat. And if you need to even refinance your home for your sellers, this is your girl here. So you guys, I appreciate you guys coming on today and listening with us. And we'll see you soon.
Have a good day.